Welcome to our first town hall of the year, where we're going to be going deeper on impact and what that means for opportunity. So just a few housekeeping items. Everyone is muted on the call. This is really for all of our benefit so that the speaker can be heard clearly. So appreciate that. If you do have questions, at the bottom of the screen will be a Q&A button. If you can click on that, you can submit questions. Those questions are submitted privately, so only us as hosts will be able to see those. If you have questions about viewing things or seeing things, or questions throughout, please type them in as they do come up, and we'll make every effort to answer all those questions. We are going to have a Q&A section at the end to answer any of those questions. If we're not able to get to them, we will do our best to follow up with you after the fact as well. So thank you, everyone. Welcome. And so we want to welcome Calum and Dan. So I'll let Dan take over from now. So Dan?
Well, thank you, Andrew, and good afternoon, everyone. As Andrew said, my name is Dan Murray. I serve as the CEO for Opportunity International Canada. And I just want to thank you for taking the time to join us today for the first of 4 town hall meetings scheduled for 2020. Robert Lupton, in his book, Toxic Charity, opens with the following comment. While we are very generous in charitable giving, much of that money is either wasted or actually harms the people it is targeted to help. That comment brings me to my guest and co-convener of today's call, Calum Scott. For the last 7 years, Calum has served the Global Opportunity International team as the Global Impact Director. And today, Calum will be talking to us about 2 very large topics, social performance management and the response of microfinance to the challenges our clients face from climate change. There will be time for questions towards the end of the call. Calum, welcome to the call, and thank you for making time available, particularly so since I know it's 4 a.m. your time locally. I know you have a lot of material to share with us, so over to you, Calum.
Thanks, Dan. Yes, I'm Calum Scott, and I'm Opportunity's Global Impact Director. I'm based in Singapore. It is very early here, but I got to bed very early last night, so I'm feeling rested and ready to go. I've been with Opportunity for over 7 years. My background is in economics and social science, and I'm passionate about helping organizations improve their impact on people living in poverty. And this session is about going deeper on impact. That's what my role with Opportunity is all about. It's about measuring impact, understanding how we are changing our clients' lives, and how we can deepen the positive impact that we're having. Now, I imagine many of you are long-standing Opportunity supporters, but I also know that there'll be some of you on the webinar who are new to the Opportunity world. So I just wanted to start by explaining the Opportunity model briefly. We raise funds in Canada, the US, UK, Australia, and a few other places to help lift people in developing countries out of poverty. We don't directly fund those people who we call our clients, but rather we provide portfolio funding and other capacity building support to local organizations who then lend those funds onto clients in the communities that they serve. So they provide loans along with other products such as savings, insurance, and also training for our clients. What's critical is we very carefully select the partners that we work with, and we select our partners based on a shared mission and goals. So we're looking for institutions that share our mission to lift people out of poverty. We're also looking for partners that have sound local management and the potential to grow to serve large numbers of people in poverty. So Opportunity is in the business of microfinance, if you like, providing people in poverty with access to financial services. The microfinance model is similar everywhere we work, but every organization we partner with is different. And each individual client has their own needs and challenges. And my role is about making sure that the partners and programs we support are focused on reaching those most in need, meeting the needs of that group, and also ensuring that we have the greatest positive impact on those clients. So the team that I work in, we work with our partner organizations to help them understand their impact and improve how they work, improve the services they provide, and ultimately the impact on their clients. And we do that knowing that circumstances vary from place to place and change over time. So what works best for any client or any partner will differ between organizations and between places. So really the key to unlocking greater impact is to continually ask ourselves these three questions. Are we reaching the clients we want to reach? That is, are we reaching those in need that are living in poverty? Is our response appropriate? Are we providing the right products and services and meeting clients' needs? And are we having the impact that we want to have? Are we transforming our clients' lives? So how do we go about asking and answering these questions at Opportunity? Well, the first thing to say is that we take an approach based on data, and we measure what we care about. So our mission is to reach the poor and excluded. So we care about household income for the clients. Location of the clients is important. So rural clients tend to have less access to financial and other services than clients in urban areas in the countries that we work in. So that's important to us. We record the gender, age, and other key characteristics of the clients. Women tend to be more excluded, and people with disabilities or from lower classes or castes also tend to be more excluded from financial and other services. And we particularly want to extend services to those without access to water and sanitation, education, and, as I say, financial services. So our partners collect data on these indicators from the clients that they are serving. For example, they will measure the income level of clients when they join the program, and they will survey the clients again after a period of time, usually between 2 and 4 years. So where does the SPM team fit in, the team that I work in? Well, collecting survey data from clients, analysing and interpreting that data, it's really social science work. It's challenging for our partners to do that because they usually lack capacity in that area. They're very lean organizations. They're working in challenging environments. They're typically focused on growing rapidly while keeping costs low so that they can serve more people in need with affordable services. That's tough to do. So actually most MFIs struggle to find the time and resources to robustly ask and answer the 3 questions that we saw on their own. And that's where my team comes in. So I head up Opportunity's global SPM team, Social Performance Management team. We're a small team. Essentially, it's myself and my colleague Nicole, based here in Singapore, and we have one other colleague based in India. We're expert in poverty measurements, in implementing surveys, and we have experience of over 10 years working with partners to help them improve what they do around measurement and analysis and reporting. Now, as I said, every partner is different, but I thought it would be interesting to spend a little time looking at the work that we've done with one of our partners in the last 18 months. That's a great case study that will give you a sense not just of how we work, but also through the results, it will show you who our typical clients are and how we're helping them move out of poverty. So the opportunity partner I have in mind is called Samhita. They're a medium-sized microfinance institution working in India. They have 100,000 clients. In India, poverty is concentrated in the north, and Samhita work in 3 of the poorest states in India, where a large part of the population lack access to proper sanitation, quality education, and other key services. Samhita are a very lean organization. It's amazing what they do with their small management team. And the leader, the CEO, is a very impressive person. And really, they have grown to reach a large number of clients and provide a large range of services in really challenging circumstances in India. So 18 months ago, we put together a plan to work with Samhita to help understand the needs of their clients and how they could better serve those clients. And this is the work program that we agreed on. There were 6 elements to that program. Just given the time, we'll look at 2 of those. So the first thing we did was to review the key policies of the organization to ensure that it's run efficiently and effectively and that the clients are well served. And this is a list of the policies that we reviewed with Samhita. And I'm not going to talk through all of these policies, obviously, but I wanted to put the list up on the screen just to give you a sense of what's really involved in implementing best practices at a microfinance institution. And you can see it includes things like anti-discrimination policy, child protection, environmental policies. So as I say, we worked on all of these policies with Samhita to make sure that they were optimal and also tailored for the environment that they're working in. After implementation, as part of after developing the policies, as part of the project, all of Samhita's 295 staff were then trained in these policies. And then sometime after the training, Samhita carried out a surprise audit across 15 of their branches to ensure that the policies were being properly applied by the staff in the field. So there was a real intentional approach here. It wasn't just about putting policies in place and then locking them in a drawer. It was really about ensuring that all of this is embedded in the work of the organization. Now, the other thing I want to look at, and one of the most interesting parts of the project, I think, for today, was the impact survey. This was the first time Samhita had carried out this impact assessment survey and presented these results. And I think this is quite interesting. So they surveyed almost 400 clients, so a robust survey size. That covered 80 of Samhita's branches, so it's representative of all of their clients. And the clients were surveyed in 2015 when they joined the program, and then surveyed again in 2019, which means that we can look at how client status has changed over a number of years, but when they've been clients of the organization. So just running through a few of the results, 45% of the clients live in rural areas, 55% urban. The age breakdown of clients is interesting. The largest age group is 31 to 40, and 80% of clients are aged between 31 and 50. So only a small proportion are under 30. And that's quite common in microfinance. Average ages tend to be younger for partners in Africa, where populations are generally younger. Also looking at the qualifications of clients, 41% are illiterate, and I think that's interesting that 41% have not completed any formal education. That's higher than the Indian average for the population, which is 30%, and it's a sign both of the areas that Samhita are working in, and also it shows that they're focused on reaching the excluded. Some financial service providers would focus on those who are literate because they're easier to serve, frankly. But Samhita are clearly focused on those who are excluded, and only 13% of their clients have better than a middle school education. Okay, so coming on to look at the change in client circumstances between 2015 when they joined and when they were surveyed again in 2019. Through the survey questions that we asked, we determined the income level of households, and what you see over time is a fall in the proportion of the clients who are living in poverty. So the percentages in each case show the percentage of those surveyed who are living below each of these three poverty lines. So $1.25 a day, $1.88, which is the national poverty line in India, and $2.50. And in each case, the percentage of Samhita's clients living below the poverty line fell over time. So almost a third of clients were living on less than $1.25 when they joined, and that had fallen to 18% by 2019. And similarly, the proportion living on less than $1.88 a day fell from 68% to 51%, and those living on less than $2.50 a day fell from 85% to 69%. Now, what I would also say is income isn't the only measure of poverty, and it's perhaps not even the most important measure in India, where people lack access to clean water, sanitation, and quality education. So Samhita also surveyed clients on those aspects of poverty, and what they saw was a large increase in the percentage of clients with their own toilets. So that increased from 54% in 2015 to 87% in 2019. The percentage of clients with and without access to safe drinking water reversed. So 3 in 5 clients now have access to safe drinking water, whereas 3 in 5 lacked access before. Now this is important because our hypothesis with microfinance is that it helps clients build up a business, it helps them increase their income, and it gives them funds that they can then use to invest in water supply and toilets. So that appears to be borne out in these results. And Samhita also saw an increase in the percentage of girls attending school, and especially this is for primary school age girls, so 5 to 12, and the increase for secondary school ages was even greater. And then just one last result I wanted to share with you was around clients' awareness of sanctions for domestic violence. And this is important because this is a policy of Samhita. Their field staff provides education sessions for clients on domestic violence so that they understand their rights. 95% of Samhita's clients are women. So this again was an encouraging result. The proportion of clients that are aware of sanctions for domestic violence increased from just over half to around 80%. So we're excited that we can share these results, and it's possible because Samhita started collecting this data a few years ago. That's not the case for many of our partners, and we're still working with our partners to correct that. But just for comparison, we do have recent data from another partner, Cashflow, also based in India. And they've also been collecting client data in this way for a number of years. Their last major survey covered 16,000 clients. Cashflow have around 1 million clients in total. And those were all clients who, again, had been with Cashflow for a number of years. And that survey showed that 37% of their clients had moved out of poverty. 49% of their clients had shown some increase in income without moving out of poverty, and 13% of clients had experienced no increase or some decline in income. So that's the results from two partners. I'm conscious both of those partners are in India. That happens to be where the most up-to-date recent work is that we've done. But I did want to emphasize that this is a global program, and we've worked with partners across all regions of the network. So we went through a similar program of work with Opportunity Colombia. As part of that program, we worked with them in a number of different areas. We funded a third-party assessment of their practices that helped us identify policy areas for us to work on together, as we did with Samhita. And we also helped them clearly define and monitor their social goals and introduce client surveys based on the indicators that we developed with them. As a result of that work, Opportunity Colombia were awarded SMART certification in 2016, and that certification was renewed last year. So that's an external independent assessment of their practices, and SMART certification is really the highest award you can receive in terms of customer service and client protection. It covers issues such as transparency in terms of pricing and terms and conditions of financial services. It covers fair and respectful treatment of clients, privacy of client data, the fact that they have an effective client complaint resolution mechanism. So really all the features of a bank or a financial service provider that we would expect in developed countries. Now, as I say, I can't show data across all of our partners, but I wanted to just summarize what we found to be generally true from our work across the Opportunity portfolio. So we found that microfinance absolutely helps clients increase their income. It reduces risk. It helps smooth income of clients. I would say we also have found absolutely that microfinance alone is not a miracle cure for poverty for every client. And for that reason, as you probably know, Opportunity supports education and health programs to tackle the other barriers that prevent people moving out of poverty. For me, one of the really key points is that we are measuring how clients' welfare is changing on an ongoing basis, because that's how we can really start to understand where are we working well, which products and services are really effective in helping clients, and where do we need to refine the products and services that we offer to meet local needs and improve our impact. And also, you know, what I always say is that the key feature in our partners is that they have a strong social mission and commitment to best practices. So even if there are some challenges or lack of resources in a partner, if they have that commitment to measure their impact and improve impact, that's really the key feature that we're looking for in our partners. So really, it's not the results that matter. Of course, the data is critical. It's about what we do with the data, and the most important thing is that we act on those results, and we aim to improve and get better. So with Cashbore, they look at why a minority of their clients weren't able to increase their income. Are there other barriers to them moving out of poverty that need to be addressed? And Cashbore in the last 2 years have expanded their community health program because that's a major issue for many of the communities that they are serving. With Samhita, they plan to introduce a new product that's better tailored to the needs of some of their clients. And as I say, you know, what we've learned is that it's partners that follow those processes, that survey clients, that analyze the results, and then use those results to inform strategy that are going to have the most positive impact on clients in the long run. And we do know also from experience that adopting industry best practices improves the outcomes for the clients. So we're always working with our partners to assess their organizational capabilities, to identify weaknesses and gaps, and to work to improve those. So all of this work is it's a work in progress. It's a journey. We aim for the gold standards, but we're absolutely not perfect, and our partners are not perfect. I'm happy if we're working hard to move in the right direction. So that's the SPM program, and I'll be happy to take questions on that and discuss that later. But I wanted to spend a little bit of time on the second topic that my team are working on and have been working on in the past year. So I want to talk about microfinance and climate change. And you know, this is in the news now. I don't think it's ever going to be out of the news going forward, I have to say. I think 2019 was the year when climate change really became a headline globally. And the year ended, of course, with the devastating bushfires in Australia. I'm based in Singapore, but my home is Sydney. I'm an adopted Australian citizen, and I've lived there for 10 years. And when I was home over Christmas, I could see how that disaster is weighing heavily on so many people in Australia. We get bushfires every summer in Australia, but the fires have been so much worse this summer because it's been so dry across so much of the country for such a long time. And so scientists tell us there's a very high likelihood that the scale of the disaster is linked to climate change. Now, Australia as a country has the capacity to help the people that are worst affected. But the impacts of climate change and extreme weather are even more devastating for communities in developing countries. And in fact, Indonesia is actually suffering devastating flooding right now, and it's barely making the news. More lives have been lost in Jakarta since the start of the year than in Australia. So the lack of news coverage just highlights, in some sense, that this is almost business as usual for developing countries now. And the impact there just shows how much more vulnerable developing countries are. So the UN estimates that developing countries will bear 75% or more of the cost of climate change. It's countries in the global south that are most exposed to changes in climate. Africa, for example, is warming faster than the global average, and it's the poorest that are particularly vulnerable because they have limited capacity to prepare for disasters and limited funds and assets to fall back on when there is a disaster. So the UN has estimated that up to 120 million more people worldwide could be living in extreme poverty by 2030 as a result of climate change. And there are multiple ways in which climate change is going to impact the poorest. There'll be impacts on health from extreme heat in some places, from increased disease, and from impacts of storms and flooding. There'll be impacts on businesses, especially agriculture, from changes in temperature and rainfall, and extremes of temperature, rainfall, and drought. And that will mean, reduced income and shortages in food. What is the connection with the other work that we do? Well, a key role of the SPM team is to anticipate changes in client needs and consider ways in which we, through our partners, can serve that need. And so for that reason, we've been studying the potential impacts of climate change on our partners and on our clients. And we see climate change as a significant threat to both. At the same time, we also want to, and we feel we have to, take a positive mindset on this. I see this as an opportunity for microfinance, and I'll explain why I say that in a moment. But firstly, just to share with you a couple of examples of what we've seen within our own network in the last couple of years. So just as in Australia, I mean, we're seeing disasters on a scale that we probably didn't expect to see until sometime in the future. Climate change is definitely something that's affecting us in the here and now. We've seen typhoons, drought, and extreme rainfall. And it's a threat to the clients, and it's a threat to our partner organizations. So our largest partner, ESAF, is based in Kerala in South India. Flooding in Kerala last year was the worst flooding in a century. It left 1 million people homeless, and it had a major impact on ESAF's clients. So $300 million of ESAF's loan book was initially affected by the flooding. And in Indonesia and the Philippines, typhoons, storms and flooding have had a major impact on the communities we serve. The best estimates are that in the future, these extreme weather events will become more common, and really, this suggests they could be a very serious threat to our partners' viability as well as to the clients' livelihoods. But at the same time, as I say, while this is a major challenge, we need to stay positive. We can see this as a threat. We can also see this as an opportunity for the sector that opportunity works in. So microfinance, the reason I feel it has something to contribute is this is a platform that's been built up over the last 30 years. It's grown to serve over 140 million clients. So services provided through that platform could directly benefit 600 million people. That's based on an estimate of 5 people in a household per client. Secondly, as I said, it's the poorest who are most vulnerable to climate change. Microfinance reaches the poor, vulnerable, and excluded, and it's designed to serve those in developing countries who are excluded from formal banking. In particular, microfinance reaches poor women, and 90% of Opportunity's 6 million clients are women, And gender equality is a recurring theme in the missions of our partners. And that's important because there's a gender dimension to climate change impact as well. So it tends to be women farmers who contribute the majority of agricultural labour, or women in the household in developing countries. So they face the greatest hardship when crops fail or crop yields fall. So our partners are well placed to address the gender imbalance in climate vulnerability as well. Also, the nature of the microfinance model suggests it can be a major part of building resilience. Microfinance institutions are a permanent trusted presence in poor communities. So it's not that they are an external organisation that goes in and helps a community at a point in time. They are typically a permanent presence, and they're a trusted organisation. And it's that ongoing support that's needed to build up resilience to climate change. And the best form of support for people threatened by natural disasters is actually not to wait until disaster strikes and then offer relief. It's to help communities build up resilience ahead of time. And research shows that money spent on disaster preparedness is 8 times more effective than money spent on disaster relief. So if our partners could use their existing infrastructure to build resilience, that could be a really powerful intervention. And some of our leading partners are already starting to do work in this area. So I mentioned ESAF had been severely affected by flooding in the last 2 years. And I also wanted to talk a little bit more about ESAF because they've built up a clean energy program over the last 3 years that's had local and global environmental benefits. So the majority of the world's poor still rely on wood, charcoal, animal dung, crop residues and coal for cooking, heating and lighting. That generates smoke and soot that causes almost 4 million deaths each year, because often those materials are burned in the home, and that's extremely hazardous for health. It's also bad for the global environment. Those practices contribute up to 5% of greenhouse gas emissions globally. And so ESAF are tackling this problem by providing loans to their clients for clean cooking stoves, solar lanterns, and water purifiers. Solar lanterns replace highly polluting kerosene lamps. Water purifiers actually eliminate the need to boil water, which also reduces fuel use. And clean cooking stoves significantly reduce smoke and soot, and that's either through using cleaner fuels or through increasing the efficiency with which the fuel is burned. So all of those products provide short and long-term health and environmental benefits. ESAF provides awareness sessions to clients around the health and economic benefits of these products and around the credit that they offer to allow the purchase of the products. The products, I should also say, have other benefits to the households. They provide lighting in the evening, that helps kids' education. Water purifiers reduce the burden on the household of collecting fresh water where there's no water supply in the household. So there are those benefits from the products as well as the environmental and health side. So as I say, ESAF have introduced this clean energy program. There is a process that they go through whereby after the information session, if the client's interested, they will select a clean energy product and they'll apply to ESAF for credit. That's the first step. ESAF assesses whether the client has the capacity to repay the loan. If yes, the loan is approved, and ESAF transfers payments to the product supplier. So the money doesn't go to the client, the money goes to the product supplier, and the supplier provides the product to the client. That's steps 2 and 3. And then throughout the loan period, ESAF will collect the repayments and provide after-sales care to clients, and that's step 4. What's also really neat about this scheme is that because it reduces carbon emissions as well as providing the local environmental and health benefits, it's recognised under the UNFCCC, the Framework Convention for Climate Change, under the Kyoto Agreement, and ESAF are actually able to claim carbon credits for the carbon emissions foregone. So Microenergy Credits is a third-party auditor that's certified by the UNFCCC, and they conduct an annual audit on the programme and certify the tonnes of carbon emissions avoided. And so to date, ESAF have provided these products to 400,000 of their 2 million clients, and they've claimed $300,000 in offsets for the CO2 emissions avoided. They would like to expand that program to reach new communities. We're hopeful that that can be the next step in the program. And they also are looking to expand the range of products to include solar rooftops, solar inverters, and contributing to microgrids, and also electric transport, so two and three wheelers. So I think, that's just one example, but I think it demonstrates that the opportunities for microfinance to contribute to addressing climate change are there. We're planning a research project to understand more about the role that microfinance could play more generally, both in avoiding emissions and also helping clients adapt to the impact of climate change. And that will focus on a couple of our leading partners. Looking into the future, I imagine the microfinance sector will be focusing on insurance, including weather-based insurance in the products that they offer, promoting more sustainable livelihoods, particularly around agriculture. And Opportunity has an agriculture team that are working on improving value chains in the communities that we work in, and also helping clients diversify and evolve the crops that they plant. So promoting income diversification is a good way of ensuring against crop failure. And also a very new area would be around helping clients with disaster prevention and other community resilience projects. So I'll stop at that. I mean, the last thing, I think there's a great quote that I wanted to share from Ban Ki-moon, former Secretary General to the UN. He said, we're the first generation that can put an end to poverty, and we're the last generation that can put an end to climate change. And I think microfinance can be a way of addressing both of those things together. So I'll stop at that point. I've covered quite a lot of ground, and I know Dan and Andrew are keen to leave, and I'm keen to leave time for questions and discussion.
Okay, thank you very much, Calum. So as I said, there is that Q&A button at the bottom of your screen if you want to submit some questions there. So one question we do have was inflation taken into account when determining increases in income over the years in the survey? A quick Google search indicates that inflation in India in recent years has been 6 to 9% year over year.
Yeah, that's a good question, and inflation is taken account of. I didn't really take the time to go through the methodology, but in brief, we don't directly ask the clients about their income, so we don't ask them to total their sources of income or estimate their income over the past year. That's been shown to be very difficult to do and doesn't really lead to robust results, not least because, unlike in developed countries, most people don't have a formal record of income, and in developing countries, people have multiple sources of income, which makes it hard to directly measure. What we use is an industry standard tool that estimates income based on proxies. So it asks a list of questions about the circumstances for the household, and then uses algorithms based on national data in the country to estimate the proportion of the clients surveyed who are below the poverty line. So because it's not directly asking about income, inflation it isn't an issue. We do find when we compare it with other methods that it's an effective method of measuring income. So it's actually called the Poverty Probability Index, and it's quite widely used in microfinance and also in other parts of the development sector.
Okay, wonderful. Another question's just come in. The $1.88 Indian poverty line, is that per person in the household? For example, is a household of 5, $9.40 a day for the poverty line, and the presumption there is that it is in US dollars as well?
Another great question. Yeah, so that is per person, and it's in US dollars. So the average household size in India is 5. So $1.88 is equivalent to $9.40. Just doing the arithmetic in my head for the household. And when we survey the households, we take account of the number of dependents in that household. So that's a factor in estimating which households are poorest, because obviously if there are more children, if there are more dependents, then the income that they have is spread over more people.
Wonderful. Again, if you have questions, please mark those down in the Q&A section at the bottom of your screen. We'll get to as many as we can on the call. So another question that's come in is, Opportunity's mission is to help clients move out of poverty. Is there a risk that also addressing climate change might compromise our efforts to end poverty?
Yeah, that's a good question, and it's something that we do soul searching around as well. Personally, I feel there's a moral obligation, and this is my personal view, but I feel there's a moral obligation on those of us in the developed world who have benefited the most from fossil fuels over the past decades to do the most to reduce emissions. So I'm keen that our partners and clients, shouldn't sacrifice efforts to move out of poverty. But the great thing is I don't think they have to. I mean, the ESAF project is a great example of that. The partner and the clients benefit from subsidies for reducing carbon emissions. and the clients clearly also benefit from reduced ill health, and there are other economic benefits as well. So really what we're looking for in the research is where there's a synergy between what's good for the clients and what's good for the environment. So for example, investing in more sustainable agriculture can mean reducing fertilizer use, focusing on yields over the long term, and that can have benefits for the wider environment as well as for the clients. So really we want to do research to understand where are there trade-offs, potential trade-offs between poverty and benefiting the environment, and where can we focus on areas between where there are synergies between the two.
Calum, it's Dan here. You talked about the importance of best practices that protect microfinance clients. Just wondering, how do these standards within the microfinance sector compare with, say, consumer rights around personal banking in countries like Canada?
Great question. So I obviously I won't be as familiar with the banking regulations in Canada, but I can talk for developed countries generally. I guess one difference is that regulations vary across developing countries. So for example, in India, there are really quite strict banking regulations that cover the type of loans that can be offered, the interest rates that can be charged, standards of consumer service. But in other markets where we work, regulations are often quite lax, or they're poorly enforced. So really, the work that we're doing is trying to ensure a minimum standard for all of our clients. So even where there isn't regulation, where it isn't an obligation for service providers, we want to make that part of business as usual for our partners. And it covers standards that you would expect in developed countries. So transparency is one. Being clear about the terms and conditions of products, being clear about the effective interest rate, so not just flat interest rates, but also what the APR is of each product, providing the right to complain, and right to privacy in client data, and it's especially important where we work because the clients have particular vulnerabilities. So you saw in the Samhita data that 40% of their clients are illiterate. So in that case, it's not enough simply to provide written terms and conditions. Those have to be explained verbally to the clients as well. So the best practices that the industry have built up and the opportunity have contributed to will go into depth about how terms and conditions should be shared with clients, and also about clients' right of complaint, and giving clients sufficient time to understand what they're signing up to, and the right to cancel products and services within a period after they accept those. So in some sense, it would look very, very like the terms and the standards that we would expect in developed countries, but also in some ways it goes further than that, because it needs to allow for, as I say, the particular vulnerabilities of clients in these environments.
Okay, wonderful. Thank you so much.
Great.
I think that's all the questions we have for today. Over to you, Dan.
Well, thank you, Andrew, and thank you, Calum. I'll just add for our supporters that there are actually a number of opportunities to support both SPM and climate resiliency initiatives, resiliency initiatives for our clients in the countries where Opportunity Canada serves, if this is of interest to you. For example, our partner in the DR is very interested in investing in SPM development. So there are project opportunities there. Some of our implementing partners are experimenting with loans to clients for solar panels, especially where they are linked to income generating ideas. And there's also an opportunity to fund solar panels at the branch level for some of the offices of our implementing partner in Ghana to help deal with power outages and reduce dependency on generators, which are costly and not environmentally friendly. So, reach out to us if this is an area that's of interest to you. At this point, Calum, I'd just like to take the time to thank you for taking the time to share so thoughtfully with us today. It's been a very informative presentation. I've learned a lot from it, as I know our listeners have as well. So keep up the great work that you and your team are doing to help ensure Opportunity International is truly and positively impactful in the lives of our clients. And I'd like to thank every one of you for joining our call today as well, and just let you know that this call has been recorded and will be available for reviewing later if you wish. And be sure to join our next call scheduled for April 1st, featuring another global colleague, Rosa Wang, who will talk about leveraging technology to increase financial inclusion for our clients. So thanks again, and Calum, you got a long day ahead of you, but thank you very much again for making time to share with us today. Much appreciated.
Thanks, Dan. I really appreciate the opportunity to speak, and thanks to everyone who joined today. That's much appreciated.